Retail inflation has risen to 5% in June. However, that figure was still lower than what we had estimated. This is due to a sharp drop in food inflation. But on the other hand, May industrial production, that is IIP growth, disappointed with a drop to 3.2%. And Latha Venkatesh joins us to break down those numbers. Latha, not very surprising on the inflation front?
That's right. CPI number is a pleasant surprise, coming in at 5% against expectations of 5.3%, and largely because of food inflation ticking lower at 2.9% compared to 3.1% in the previous month, that is May. The food inflation is genuinely low because last year, same time, it was minus 2.2%. So it's a real low base. In spite of it, if the rise is only 2.9%, that means the back of food inflation has been broken. Genuinely, it is because vegetable inflation has come in lower. Therefore, you should expect today that bond yields will fall further. Already, yesterday they fell because of lower crude prices. You saw bond yields falling from 7.87 to 7.78, a 9 basis point fall. You can see a further fall towards 7.7%. Now, when bond yields fall, bond prices rise. However, the expectation is that as the yields move towards 7.7, people will come and sell bonds, because in spite of this low food inflation number, the core inflation has come in high. It's come in at 6.3%, and therefore the Reserve Bank will be worried. Core inflation is a number it watches very closely for policy making. It will also worry about the MSP and the impact on future inflation, and therefore the market is still worried. A majority of the economists still expect a rate hike in August itself, August 1st policy, or maybe at October at best. So if there is a rate hike in August, then the market is going to, take profit, and therefore at higher prices you are going to see bonds selling. At the moment, a majority of economists are working with a rate hike on August 1st, despite the lower than expected inflation number. Very quickly, the IIP number has not been very good. 3.2% for May compared to 3.9% expectations. And this is largely because of disappointments on mining, manufacturing, consumer durables. I mean, a whole host of things. The worst came in consumer non-durables. That came at minus 2.6. It's a disappointment because consumer non-durables is a big category. It is, all your toothpaste, toothbrush, food items, FMCG items. One thought that was doing well because of rural growth. That minus 2.6 is going to hurt. However, capital goods has done well at 7.6%. But overall, it's not a very great growth picture that comes from the industrial output numbers. Market worries more about inflation, and that number was good. So expect a bond rally today.
All right, a mixed bag on the macro front. Thank you so much, Latha, for joining in.